on some stuff like because some people have forgotten about it or passed it by or whatever. Um, I wanted just to start with a quick look at how the deal book's been doing today. We've tried to get a few smooths, but what we're trying to get at the moment is a binary decision, a yes or no decision on it. So at the moment, obviously, it's not got that. It's just simply the dealers have gone offered their bids. But I want to just look at the last few trade opportunities that you might have been able to find using the dealer book. And this is the Nasdaq, and you can see obviously when the dealer book is starting to go offered like this, then of course we're trying to sell any kind of green candles into top edges, and that would be pretty obvious, right? So we've got a green candle into a new high price. Obviously, it's not the dealer's not selling it, so we've got to be careful and make sure we wait for the dealer to actually sell it. This green candle should be a very easy candle to make money from. The dealers are sell side. It's a green candle. We should easily be able to make money. Interesting that the dealer bought the candle at the low price there back, and the price went back up again here. So again, you're looking at these as signals to try and figure out whether the dealers are a buyers, sellers, or whatever. One of the interesting trades we've seen in the dealer's book was the short sale, of course, on the oil just prior to the big drop here. You can see that the dealers actually started to sell on a green candle here, and I know it was a spinner candle, but you know it is a spinner candle, but it's still a sell. I mean, you can see the dealer did get short on that spinner candle, and obviously just ahead of the big dropping phase. Since then, you can see the dealers bought a lot of oil at the bottom edge. Yeah, so basically, as soon as that line was going up, any dips into the bottom edge was just getting bought by the dealers, and we've had a very very strong buy side reversal off of that news spike that we got from the Iranian nuclear deal storyline. So obviously the dealers went very long indeed here. And again, it's not about whether I think the dealers should be long or whether Jack thinks the dealers should be long on this oil play here. It's about what actually reality took place. Well, did they get long at that price? And the answer is, well, yes, they did, because we can see it. The dealer did start to buy into the bottom edge, and it's not just because of the delta, it's actually because of the dealer's own book. So when the dealer went long oil into the bottom edge post the data, that was very, very powerful information for me to start looking at that oil and saying, you know what? Well, if they're going to go long, I'm going to take a look at this. You could have got in at 68, 60s. It was worth about $700 on the buy side spike. Absolutely nothing wrong with that bit of business right there, is it? Nothing wrong with that bit of business. And obviously they kept it bid for a very, very long run back up towards the top edges there. And they've chopped it round into a sell trade here at 1540, back into a buy trade here at 1543, back into a sell trade here. And you can see the dealers are just rotating the price now. When you see this going from bid to offered, they're just basically rotating the price. So what I'm trying to do with the coders is I'm trying to take this noise out of this line and make it, as I said, binary. It's a buy or a sell signal, and that'll make life a little bit easier for us when it comes to generating an outcome from these things. The gold market, very, very clear to see what the dealers were doing. So the dealers were obviously going long into this drop. It took them a bit of time because they took a bit of pressure off here and then here. And obviously they came back in at the very, very bottom candle here. You see how the dealers have gone bid into the bottom candle there. So the dealers went bid into the bottom candle. We got this brilliant lift off the bottom candles. And then, of course, the dealers went very short here on this uptick candle. And you can see how strong that very, very, very big top edge short is. Very strong indeed. Massive sell opportunity at 1546 on gold. And, I mean, you're not going to miss that trade, are you? Because it was the 56 trade pullback that we were talking about earlier. So that was the 56 trade right there. That was the signal you got on that little candle right there for a quick short. And look at it. It doesn't have anything else going for it. It doesn't have anything else going for it right there, except the dealers have sold it. I mean, obviously, we've started to see a bit of a movement on the euro dollar here, or the dollar index. So that might have given you a few clues about why the dealer decided to go short into that gold price. But the fact that they went short into that gold price meant that we had this very, very strong decision to make about that short sell. Well, on this big down candle, we've obviously got a flip. The dealers have bought that down candle. right? So at the end of that candle, we know what we're doing. And at the end of that candle, we know is this price here. So we know the dealers are back buying gold again. So what are we going to do? We're going to go back buying gold again, right? We're going to go back buying gold again. And the takeaway from that buy on gold should be relatively good. And obviously, all we've got to now do is try and stick around for that. Now, I quite like this one because the value completely 100% agrees with that trade, and so do the dealers. So when the value agrees, the dealers agree. Then, of course, we've just taken a sell trade off of a sell trade off of 32s, almost 31s, a buy trade off of 26s. That's $500 on the way down, and the $400 on the way up. That's a $900 rotation on gold using the dealer book levels. So again, is it clear? Well, if it's not clear, we shouldn't be trading, should we? If you're having to squint hard to see the trade, is this buy trade here clear? Yes, it was, because we had a macro buy on this candle and we had a micro buy on this candle into a new bottom edge. So that buy trade there was perfectly clear. If it's a tiny bid offer spread change, it's not a change in dealer narrative, right? I mean, this is a bid offer spread change. This is what we're talking about, right? That's not going to get me, that's not going to get a binary sell decision. Do you know what I mean? So that's not going to get a binary sell decision, but that is not a bid offer spread. That's a pull. So that's going to get a binary sell decision. So it's going to start differentiating between just a bid offer spread change with a tiny bit of buy side or sell side pressure. Then we want to try and figure this out when we start seeing the full actual change to the dealer's book at that stage. So when the dealer's book goes bid here, I am now a buyer. I am looking for that buy trade. I'm looking for the story. And we obviously get a very strong story here because obviously we've got a buy on the book and we get a buy in the short term. And obviously now we've already seen a buy. This makes this trade here very, very easy to make money from. And that's like the highest probability play we can get into that story, haven't we? Because we've already seen the buy coming in. So it's like we're part of the buy that's going to stop the market. We're not part of the buy that's going to stop the market. The buy that stopped the market was there. We just joined in at that stage because we've now seen the market stopping. So we still need to see the dealer stopping the market. And if we don't, then we're part of that dealer stopping the market story. And that still presents some risk, but very, very limited risk, because this is the dealers we're talking about. This isn't a proxy for the dealers. This isn't the delta that might be the dealers or might not be the dealers. This is the dealers. They are buying gold. So that gives us a very strong sense to get into the gold at the dip price if we can. And that's where the big value in this as a product is going to ultimately become. We're not going to do away with the line, Johnny. What we're going to do is we're going to have a line here and we're going to have the binary line on top of it. So we're going to get the detail inside of the binary decision of a buy or a sell signal. So that's going to be part and parcel of the whole thing here. So the dealers are selling it, and there's the line, and the dealers are buying it, and there's the line as well. So it's not going to be an either or type decision. We'll have both. So that's the deal book up to now, but it's been very, very good. We've had a bit of fun with it today. We've done some pretty good business with it. And again, just looking for strong stories and, trying to find a way into some of the strongest of the stories. And sometimes a lot of trades that we see is just pure fair value. It's just purely fair value. And we've got to just acknowledge that fair value story. But the second classroom we're going to do this afternoon is about the, just watch this S&P, guys. Looks as if there's a little bit of value developing on that in the short sell side. So just be careful coming into these top edges. Let's see if we get any leans up here that might give us so watch for any kind of voltics arriving that might suggest that there is a sell coming into this NASDAQ S&P. Anyway, the next classroom is going to be on the on the contango backwardation. It's a question that George asked this morning, so I want to cover it for the purposes of recording. So let's take 60 seconds, guys.